Hey everyone, today we're talking about how do you use a line of credit for your business, what to use it for, and maybe more importantly, what not to use it for. Before we do, hit the like and subscribe button for me. Hey entrepreneur, you should definitely know this. Don't skip this episode. You're listening to Financial Sense, Arizona's financial podcast that gives you insights that you can only get from a friend in the business. Recorded and brought to you by National Bank of Arizona, the bank of the community. Hello, I'm your host, Brent Cannon, Director of the Community Bank here at National Bank of Arizona. Thank you so much for joining us today. Today, we're rejoined by Mayra Uribe, Senior Vice President of Multicultural Banking here at National Bank of Arizona. Mayra, welcome back.
Excited to be here. Thanks, Brent.
Yeah. In our last episode, we talked about the importance of credit, the importance of the 5 C's of credit, understanding, kind of really building that foundation for a small business. And today, I want to delve a little deeper into the business credit issue that small businesses really struggle with, and that is the need, when it's right, to get a business line of credit versus a business loan. And so I really want to talk about the needs of a business and when it's right for a business to use a line of credit. So let's start with just talking about what is a business line of credit.
Yeah. Business line of credit is a flexible way to access credit through having a line that's revolving. Okay. So revolving meaning that you draw from the amount that you have available, you repay it, and you have the ability to reuse it. And one of the great features of a line of credit is the amount that you draw is the amount that you will pay interest on only. Yeah.
So, and you can also have a non-revolving line of credit, and that's where you have a fixed amount and you draw it down, but it doesn't reload. It doesn't revolve. So I guess for a lot of folks, they can think of how a credit card works. They have a limit, say, of $10,000. They go up to 5, they pay it down. That money is now available again for them to draw upon. So it's the same thing in a business line of credit. Yeah. But I think you really hit the key, and that is when you don't use it, that saves you interest expense. So you're better off if you have cash in the bank and you have a balance on your line of credit, you want to make sure and pay part of that balance down so you're not paying interest on it if you don't need it.
Correct. You want to have the ability to reuse it when you have a need for it.
Right. So let's talk about when you would use a line of credit and maybe more importantly, when you would not use a line of credit.
Okay, well, let's start when you would want to use a line of credit as a business owner. You want to use it for short-term use. Right, you have an immediate need of making, for example, purchase on inventory because you're getting a great discount. Then the line of credit will come in handy. You want to use it then. If you have need for access to capital right away to make some changes within your business, definitely use it right away. If you want to boost your business, as we call it, and change your marketing strategy, you have a line of credit. Those would be a waste of using your line of credit.
Got it.
Ways of not using your line of credit would be for those purchases that are based off collateral, equipment for your business. If you are looking at buying property, so there's a different type of lending for those major purchases. You also don't want to use a line of credit to refinance any existing debt. That's a big no-no. So stay away from doing that. So those are ways of not using a line of credit. So it should not be used for.
So what I'm hearing you say is borrowers, businesses should really focus on matching the repayment, i.e., whether it's a line versus a loan, with the useful life of the asset. So if they're financing an asset that's going to say have a useful life of 5 years, theoretically they should get a loan with a repayment of 5 years because they're matching the repayment of that asset with the use of that asset, i.e., the revenue generating, time of that asset. Does that?
Yes, correct, because then they'll have collateral for that particular asset, which changes the conditions of that loan.
And I like the first example you use of using a line of credit for a seasonal ramp up, say in inventory, because they can get a good deal, or maybe that they need to buy their raw materials to manufacture to be able to hit the selling season. That's where a line of credit. But an important reminder for every business is they have to have the discipline to make sure that line of credit gets paid down when the revenue comes in. Because it's so easy to go, but I would like to go buy that new truck with this cash I have from the sales. And then the line of credit stays what we call in the banking business. It becomes an evergreen line of credit, meaning it's always green. And that's not a good use for a line of credit.
Correct. It helps for uneven cash flow. So some examples of that could be seasonality. So some businesses might have seasonality based on where they're located. I know many of our rural areas in Arizona go through seasonality because of population or because of the type of industry they're in. So it might be the products that you offer as a business or the services that you offer as a business that might affect your seasonality as well. Then you might want to leverage a line of credit as a short-term need.
Sure, that makes sense. So, and again, just to to harp on this, but when you would not want to use a line of credit is when the cash flows are going to be out over a period of time, and you have this big balance sitting there paying interest only, because that's how lines of credit are structured. You're not paying down the principal. That's not financially responsible.
Correct.
Yeah.
And absolutely. And I also want to add the fact that if you're looking at expanding your business or growing your business or purchasing another, line of credit is definitely not essential for that.
Yeah, that makes a lot of sense. So you talked a little bit about the banker assessing needs and having conversations, but what are some of the things what are some of the specifics that a business would need to get approved for a line of credit?
Well, depending on the dollar amount, it might be as simple as an application.
Okay.
But if the dollar amount is a higher range, that we might be looking at financials for the past 2 years.
Okay.
And the business banker will ask for that information. Now, we also will be running the SBSS score, as well as, the global review, and looking at the personal FICO as well. However, there are businesses that are startups. In Arizona, we know that we have huge growth in startups every day. So if it's a startup, then of course there is no financials. So then we will look at projections. What will the growth look like in 2 years out?
Right.
And then we'll also look at the business plan to make a credit determination.
Right. Well, that's that. So the more prepared a business can be when they come in to talk to their banker, the better.
Correct. Yeah.
So it's important for businesses to talk to their business banker, because the truth is that businesses, people, we don't know what we don't know. And the business banker is a professional and understands matching the needs with the proper structure. So if you have a client that comes in and state that they would like a business line of credit, is that the answer?
Well, the great thing about meeting with the your business banker, is that we will ask questions to determine how we can help. So we will want to know exactly what the funds are going to be used for, and then we'll also want to know what future goals you have for your business. So is there the potential of making other changes for your business? So with that, we will be able to determine and provide you some recommendations on what would be best for you to proceed with.
So I guess the answer is it depends. Yeah, the borrower a business line of credit may be exactly what they need, but it may not. There's other options, and that's the business banker's job, based on their experience, knowing our products. We always talk about providing the right product at the right time. I guess that's our job as bankers.
Yes, to help you make recommendations and let you know what the benefits and features of each one of these recommendations would be.
Right. Well, Mayra, that's I think really good information on lines of credit, the proper use for business lines of credit. I do see a lot of businesses, I'll bet you do too, that really struggle with what we call misfinanced or misstructured balance sheets. That's how businesses end up in that type of situation, because they're using effectively short-term debt to finance long-term assets. And that just doesn't work. At some point, the music stops and you're going to have an issue. And that's really the point of your tips here, and I think is really, really good information. So, Mayra, I want to say thank you again for sharing your time and your knowledge with all the listeners. I appreciate it.
My pleasure.
When you were talking, I was thinking about a golf shot I hit over the weekend.
Spaced out.
Can you say it one more time? Don't forget to check out more episodes on your favorite podcasting platform, or check us out on YouTube. Do me a favor, hit the like and subscribe button.